Hi there. Oh, phew.
Hi, Sean.
Hey. Um, sorry, hang on.
Okay. Good afternoon, everybody. I'll get started, and if some people join us, that's fine. And if some more people join us, but it'll be recorded too. So happy Friday. So what I wanted to go through today is kind of comparison of a lot of this information based off of how new construction is doing compared to resales, in general brokerage. So here we go. We'll just start going down this list. And again, feel free to, stop me if you have any questions. Happy to answer them along the way. So here's median price. So we're looking at, again, this is through the end of August. So end of August, we were right at 400,000. And if you look over the last 18 months or so, we're sitting, moving along pretty neutral, up 1.1% over the year. So this year has been pretty stagnant on prices as a whole. Now, keep in mind, this is all construction type. So right now I have new and previously owned on here. So this is all types. So if I look and I break down, what I want to do is go through each one of these charts and break them out separately. So if I look at all construction, we're at 400,000. If we go to new construction, so we're at 380, 390, let's call it, right? But look at the change. And new construction, there's less sales, depends on who's has incentives, but look at the change on the new construction since April. So April, which, essentially from August is about 5 months, right? We're at 470, almost at 475. And the last 5 months, we've all gone all the way down to 390. Does that mean a 475 house is now selling for 390? No. I think what this means is that the combination of what builders are putting up as specs and building, and maybe the price discounts incentives that they're putting in place are driving this number down to make it move. Because think about interest rates, right? A lower value house, might have the same payment because the interest rates are higher. So, this is a very interesting trend right here over the last 5 months of this downward trend. Now, September is usually, it'll be interesting to look at this number at the end of this month, September, because September is most of the bigger builders' end of fiscal year. So your Lennars, your D.R. Hortons, all the big builders, the end of their fiscal year is September. So they're going to shove as many closings in September as they possibly can. So it'll be interesting to see what this number does coming up this at the end of this month. But, year over year, it's down 8.5%. So last August, it was at 426 and it's at 390. So this is a very kind of interesting trend to watch here. So remember, all construction types is 400, new construction is 390, previously owned is 410, right? So previously owned year over year is up 6.5%. So last August, right here, was 385. So compared to last August, resale is up, new construction is down. On price, just remember this is median price. Now, one thing that, happens with new constructions that you have to remember is it's hard because there's a lot more variation in the new construction. So if we're sitting on new construction and we get rid of like the monthly changes, seasonal changes, if you do a rolling 12 months, this kind of paints a smoother picture of what is happening to prices, right? So year over year on a 12-month rolling average, new construction is up 1.4, let's call it fairly flat, right? Not much change. But if you look at from April, that same marker that we had, April we were 443 on a 12-month rolling average. And we've gone consistently down every month since. So it seems like the builders are trying to incentivize buyers, by providing maybe, it's a combination of things. Obviously, some of them are providing lower interest rates. They're discounting their prices. Maybe they're offering less in the houses to keep the prices down. But I mean, this is a definite trend from April, whether you look at it a 12-month rolling average or you look at it monthly, that's definitely a trend on new construction. If we go back to the rolling 12 months, so again, new construction up 1.4, but the last 6 months has been kind of a downward trend. Previously owned on a 12-month rolling average is up 5%. So, the previously owned are still moving higher, whereas the new construction, especially if you look at it monthly, is moving down. So that ends up being on all price points, it's fairly flat. If you look at price per square foot, and we won't spend too much time on this one, all construction types is 217 for median. New construction is 203 and previously owned is 229. So again, price per square foot resales are selling for a higher price per square foot than new construction. Don't spend too much time on this one. Sales price is, to me, more the indicator of the market. Percent of original price. So all construction types is at 100%. So median, half the houses are selling for full price or higher and half are selling for under that. And, we dropped pretty drastically last fall and into the spring, we recovered. And now we're sitting about 100. Now, if we break it up, so new construction is 100%. Previously owned is at 98.9. So previously owned, and again, if you get rid of a couple years in COVID, and if we look back over time, there's definitely a seasonal trend to this number, right? And we peak in the spring, summer. So if you go back, and I mean, all this is all messed up with COVID. I mean, this is a hard look here. Don't look just 3 years because this is not historically what happens. This is typically what happens, right? So we have a low from the fall, winter into the high into the spring, summer. So, and typically, once you hit May, June, that's going to be your high mark. So we hit our high mark in June. And what are we doing? We're going back down, which is very normal on a seasonal basis. Remember, this is previously owned. So what we're seeing here is not alarming to me that this is starting to drop off, because it typically will, once you head into that slower seasonal part of the year. Let's zoom back in real quick. Days on market. So days on market, all construction, 8 days on the market, roughly the same as we were last year. We were 7, that's kind of within a margin of error, about the same, still much quicker than pre-COVID. And, way down from where we were in this last winter when we got up to 25 and fell off again in the spring, summer. Now, this number is also seasonal. So remember, it has the opposite effect. You're high in the winter, low in the spring, summer, right? So here's the normal periods of time, and you can see each season what happens. Well, what are we doing now? Doesn't this drop look like what this is? right? So we're returning to a normal seasonal. So we can expect this to go back up in the winter, right? So we might be back up to 20, 25 days on the market. So, if your seller doesn't sell on the weekend, well, that's normal, right? This is not normal. This is kind of more normal in here, right? So we're going to try to find this seasonal trend again. And I don't break this apart too much for new construction because so much of the new construction, they're entering in after the fact, it's already under contract. Somebody bought a lot with the spec house to be, or a custom house to be built. So, take this kind of number with a grain of salt on the new construction because it doesn't really mean as much because that's all when the site agent's entering the information. So look at the all construction types for days on the market. I thought months of supply, we'll zoom in again here. So months of supply, when we look at on all construction types, it's 1.9, right? Which has been fairly steady for this entire year, right? We haven't varied more than 1.8, 1.9 this entire year, which is still much lower than pre-COVID. But if we break it apart, so new construction, their supply, their months of supply has been going down since last fall, right? Pretty consistently. They were at 3.7, they're down to 2.1. And it doesn't look like it's bottomed out to me. They're still going down on months of supply, which means their market is being absorbed quicker. If we look at previously owned, it's kind of the opposite. It's drifting higher now, right? So we've gone from 1.5, 1.6, 1.7, 1.8. So, this is drifting higher and we're 20% higher than last year. And other than this month of November last year, I bet you in the next month or so, we're going to be as high as we've been since essentially, coming down from COVID, right? And if we look back in time, this is an abnormally low number, but 4 is kind of, I know everybody says 6 months. I'm more of an advocate for 4 months is roughly 4 to 5 months is going to be a normal market. So I feel like over time, we're going to head back up to this number. Of course, it's higher than we have been for a couple of years, but it's still within the realm of normalcy of pre-COVID. And if we go back way in time, we were previously owned was hitting 20 months of inventory. So 20 months of inventory compared to 1.8, right? That's a 10 multiplier. So absorption was 10 times. So anybody was in this recession as a real estate agent, it was 10 times slower than right now on resales in the recession, 10 times. So a whole magnitude different. So that just puts in perspective where this market is right now. Let's zoom back in real quick. So again, new construction, months of supply is still declining. Previously owned, it's starting to go higher. It's continuing to go higher slowly. It's not jumping, but it's slowly going higher. And you can see that inventory is starting to go higher. Speaking of inventory, so let's look at inventory. So here's homes for sale, right? So overall, we have 13.8% less. I still don't know where Market Monitor gets all their numbers from. I think we're very similar to where we were last year. I don't think we're down 13.8%. But anyway, I kind of use this as a gauge. But we're not going as low as we were. You can see where the lows were in 2021, the low was in May, right? In 2022, the low was in March, February, March, in that period. This year, we kind of have been very flat over the summer, but our low is higher than the previous 2 years of lows. And again, if we go back in time, this is also seasonal. So you can see once we get in the spring, summer, we have more for sale, and in the winter, less for sale. Do I expect this to drop off this winter? Probably so, but probably not a dramatic drop. It's not going to go back down to where we were here. And then I expect us to kind of have a higher trend going in the future, but also seeing that seasonality happen. Let's zoom in real quick here. So if we look at new construction, so new construction's off 14.5%. So you can see new construction had 1,270 or so last fall, and now we're sitting about 883. So lower than we were in the fall. And, where that inventory is going to come from, I mean, it seems like it's moving sideways at the moment. So a fairly flat inventory level. Again, going back in time. So we have 883 homes, new construction homes in MLS for sale as active. In the recession, we had 3,300. So we had almost 4 times the number of homes for sale in the recession than we do today. And what's another difference is we have 50% more people living here today than we did back in the recession, right? So this number is almost a magnitude different than what this number was, right? So we don't have a glut of new construction houses on the market. This was the problem, right? This was a supply problem back here. Zoom in again. So, we looked at previously owned and new construction. So closed sales. So closed sales on all construction types, fairly flat, but off 3.3% from a year ago. New construction up 28.1%. Right. So if new construction is up 28.1% and we're fairly flat, then what does that mean for previously owned? Down 12.1%. Right. So now this is just comparing August of 2023 to August of 2022. Right. So that's 1 month of comparison. So previously owned is down, new construction is way up, which nets into all construction a little bit lower. Now, what I wanted to do to get rid of some of the seasonality on here is kind of show you what happens when you look at it a 12-month rolling period, right? So 12-month rolling period, so the past 12 months, we're off 22.4% on closed sales, right? And this is all construction types. If we go to new construction, it's up 4.6%, and it looks like it's heading higher, right? It looks like it's going to continue a higher trend. Previously owned off 29.1%. So, again, 29.1% less. At the peak, we were doing 20,000 previously owned homes in the past 12 months. So the 12 months back from this point, we did 20,000 sales. Now we're only doing 12,556. So let me just do some quick math here. So if we did 12,556, so we were doing 60% more previously owned sales in the spring of 2021, 60% more, right? So from here to here, that's a 60% increase. So does this look like it's bottoming out? I think we're kind of working our way there. I'm not going to say this is going to be the low. I think we're still going to go a little bit lower. But what I wanted to point out to everybody is that if you look at, so now we're just on previously owned, right? So let's look at it different ways. So the past 12 months we're off 29.1%. If we just look at the past 6 months, we're off 22.8. So we're less, right? The past 6 months than the past 12 months. If you look at the past 3 months, we're less. If we look at the last month, we're less, right? So this means that decline is slowing down. So, and that's what you can kind of see here is that we're trying to find a bottom. And once we find the bottom, it's not going to all of a sudden jump up. We're not going to be doing 20,000 resales, in the spring of next year. That's not going to happen, right? But it's, we need to find the bottom of the market in the next few months and start to work our way higher. But you can see, this trend really started to drop off May of last year, right? So what happened roughly the spring of last year?
Interest rates.
Rates started to go up, right? So it's a very simple answer. Rates started to go up. And look at the decline in sales once the rates started to go up. So, and again, I'm not going to predict when rates are going to come back down or what they're going to come back down to, but what do you think is going to happen when rates start to come back down? The opposite effect, right? So this change from here to here, this decline from here to here, I think was simply because there were not enough houses for sale. right? There were not enough resales. So this level of decline, not enough resales, from this point forward, that's affordability, right? So if we can improve the affordability, we will start to work our way back up, but it could take a couple years to work our way back up. You know, it's not going to happen overnight.
So you don't think it's just, well, clearly fewer listings though, right?
Correct, and we'll hit
Big
the new
reason
listing
too?
next. Yeah, yeah. But I mean, it's a combination of affordability, but and when I say affordability, it's affordability for buyers, also affordability for sellers because they can't afford to sell their house.
Right.
If that makes sense. So it's an affordability issue on both sides of the equation.
Got it.
And then, like, if we look at new construction, let's do the same drill on new construction. So the past 12 months up 4.6%. Rolling 3 months, 13.2. 6 months. Oh, sorry, I should have done this. So 12 months, 4.6, 6 months, 9, so more. 3 months, 13.2, and 1 month, 28.1. So what is this telling me? This is telling me when we look at this trend is still going to go higher, right? So last month with 28.1. So I expect next month, especially when you look at September, there's going to be a lot of closings in September. I expect this to go up. Now, one other thing I wanted to point out on this chart is, so we're just on new construction. So look at the monthly, I mean, it's all over the place, right? So it's hard to look at this and not, you know, feel like you're on a roller coaster. But remember the big months that builders like to close at the end of their fiscal quarters and at the end of their fiscal years, right? So they like to close in December. They like to close in March. They like to close in June, and they like to close in September. So I expect September to be probably way up here somewhere. And so those are the months that they typically want the closings to happen, and they try to shove as many as they can in those fiscal quarters and then the fiscal year. But it's hard to look at this and get any sense. So that's why I kind of, like to look at when you're looking at new construction, get rid of that, some of that noise, because it's hard to tell which direction it's going, but it's definitely headed higher. And again, their sales are heading higher because what are they doing? I mean, I just got an email from D.R. Horton and they're offering 4.99%, right? Is your resale seller offering the buyer 4.99%? No, probably not, right? So the new construction, and I was looking through these numbers historically, and if we go back in time, and I don't have the numbers in front of me, but I roughly know what they were. So when we had our glut of new construction homes in this range here, 32% of the sales were new. So almost 1 out of 3 homes being sold was new. And then we got in the recession and builders were scared to build a house because they didn't know if they could sell or not. We got down to about 16%. So 32% here. So 1 out of 3, 1 out of 6, right, was a new construction. And in this range here, where we were kind of a normal market, we were kind of 1 out of 5. So 20% of the sales were new. And then when the supply chain issue had some issues, we dipped below 20 again. But then as we're catching up, last month when I looked, we were about 26%. So we are getting close to this 32% number that we achieved in, you know, pre-recession on the number of sales, but it's a different reason this time. Back here is there were so many new homes for sale. Here, it's not necessarily that. It's the fact that the new homes are a bigger percentage of the overall listings because it's hard to convince a existing homeowner to sell their house. So buyers have a bigger choice, you know, bigger percentage of their choices are new construction and the incentives builders are offering. So a combination of that is what's causing, you know, the current dynamics. New listings. So all construction types, you know, all 15.6%. So again, this is rolling 12 months. So almost 21,000 listings in the past 12 months. Well, we hit 26,000 in August. So we've gone from 26,000 to 21,000. But what I wanted to point out is look at new construction is up 8.8%. So consistently moving higher. over the past year plus. Whereas look at the previously owned. What are we doing here? Consistently moving lower. So we're looking for the bottom on this too, because remember, you can't have a closed sale as a resale if you don't have a seller, right? You got to have a seller as well as the buyer. So we're having a hard time finding sellers. Is this bottoming out? I mean, I believe so. If we go through that same drill, it's off 21.9% year over year. 6 months, 22.5, 3 months, 21.1, 1 month, 10.3. So the 10.3 for this last month is encouraging that it's not in the 20s, right? So and a lot of this dip, I mean, look at this. We went from 2,100 to almost less than 800. So this dip here will make our comparisons easier moving forward. So I feel like it's hard to tell on here, but I do feel like as we go forward in time and we start up in the new year, this will bottom out as well. So if our new listings will bottom out and we can get some more houses on the market, we can have some more closed sales as resales, right? And we can eat into some of that percentage of the total closed sales, because new construction, I mean, I think they're going to get close to 30% again. So 3 out of 10 deals are a new house. So, and again, if you're not a site agent for Lennar and D.R. Horton, you're not getting that opportunity to list those houses. So, that's creating some issues on the new listings. Pending sales. So if we look at all construction types, off 18.2%, rolling 12 months, right? New construction is up almost 18%. So think about that again for a second. All construction's off 18%. New construction's up 18%. Therefore, previously owned is off 27%. Right? So now, again, same thing, pending sales. This is what's happening in the next 30, 60, 90 days, right? So this is what's coming down the pipeline. So if we look at pending sales and we go so this is previously owned. So we're at a rolling 12 months, we're at 27%, 6 months, 18%, 3 months, 15%, and 1 month, 14%. So the decline is slowing down again on this. And again, I'm not saying we're at the bottom. If it's negative, it's still going down. But I think we're going to have some easier comparisons once we get into October, November, December, right? So I know it's going to go down, but we should be hopefully getting closer to having a 0 here. And then eventually we can flip this positive. But, and again, if you look at, we were on resales, we were hitting 1,900. And, last December, we're at 700, 724. So will we be 724 this winter? I mean, probably not far off from that. Hopefully a little higher. And if we can form the bottom on the new listings, it'll form the bottom on pending sales, which will form the bottom on closed sales. And I'm talking about resales, right? So we have to find this bottom in the next few months and over time work higher. Whereas new construction is still flying, right? Pending sales, new construction up 48% compared to a year ago, right? So the new construction is still thriving. And again, it's because of availability of new construction and incentives, right? And part of the incentives is what we looked at the first chart, bringing down prices, offering lower interest rates. All of that is a driving factor. Now, I believe internally, all of that is also eroding the builder's profit margins, right? You can't reduce prices, offer incentives, big buy downs. I mean, I don't have the math, but to buy down rates to 4.99%, that's a pretty significant contribution done by the builder. So I feel like their profit margins are eroding because of the incentives. But again, they got to sell houses to keep people employed, keep everything moving down the line. Dollar volume. So let's look at all construction types. So dollar volume off 3%. New construction dollar volume up 33%. Right. So that is a lot of change on the new construction. And it's simply price times the number of sales, right? That's giving you your dollar volume, whereas resales are off 11.8%. Now, if we flip to a rolling 12 months, resales are off almost 26%. So 26% over the past 12 months. But again, if we work backwards, rolling 6 months off 21, 3 months off 15, and 1 month off of 12, right? So when you're having declines like that, getting closer to zero, that means you're working on finding the bottom. You're just not there yet. Right. So, and again, all these charts down here, the closed sales, new listing, pending sales, dollar volume, I think in the next 4 months or so, between now and the end of the year, we're going to be very close to the bottom on all of these, and we can slowly work our way higher. And I'm not saying all of a sudden we're doing 10, 20% more, but if we can do 3 to 5% more, we're headed the right direction. And a lot of those variables will be, the economic activity, if we go into recession, what interest rates are doing, the election. There's a lot of moving parts. And don't forget, like, what happens next month? What's going to affect the economy next month? October. Student loans payments start again, right? And I was doing some math with Sean yesterday, just trying to guess, and there's 1.7 trillion in student loans. And if I kind of just guess what the average rate is and what the payment terms are, that's about 0.5% of our GDP. And I think I could be wrong in my head, but I thought it was about $12 to $15 billion a month. That now, instead of people with student loans spending that money on something else, dinner, vacation, whatever they're spending it on, now they're going to have to redistribute that money towards student loans, which, yeah, it goes towards the national debt, but it doesn't go back into the economy, right? So we're taking about 0.5%. When they talk about a recession, it's when you have negative GDP, right? So just the student loans coming back into place, just by my quick math, and I'm not trying to be an economist, but it seems like it's probably about 0.5% of the GDP is what it's removing from going into the economy. So that's going to start up next month. So it's going to be very interesting to watch the dynamics of what happens to specific businesses that maybe were over supported because, student loan payments weren't due.
Anton, do you think it will have any bearing on the competition at more the entry level pricing? First time home buyer pricing?
Yeah, I mean, I think what's going to do is that, again, if somebody has, and I was reading, I think the average student loan payment was, I thought it was like $384 or something like that. I don't remember what it was, but, taking that out of your wallet, even though they would have to count that, the lenders still had to count that, I believe.
Right. Yeah,
right?
they did. Yeah.
But now it's literally not getting, it's coming out of your account. And so it's
It
going
hurts
to,
more.
it's going to correct it. That's the best way to put it. It hurts more. Reality is you still have to qualify it with it there, but now you're like, ooh, I don't know if I can afford that. And the other thing that affects home sales is rental prices, right? If rental price, and there's indication right now on some articles I've read that rental prices seem to have, on a nationwide basis, I'm not saying individually, but on a nationwide basis, they seem to have at least temporarily peaked out. And, the supply of apartments coming on the market, there's a lot of dynamics about to happen that are going to change the economy. And it's going to, again, it's weird. If like the economy worsens, then the Fed will drop the rates quicker. So it's a weird kind of dynamic that's happening right now that I don't think anybody really knows what's about to happen. But I think you just have to remember all these numbers we're looking at, this isn't going to all of a sudden be different. Yeah, you're going to go through the seasonality, right? But it's not like all of a sudden we're going to be doing 50% more in the same period of time. It's like this is going to be a slow growth back. And there's a lot of variables out there that are going to affect how slow or fast that growth back happens. I just feel like we're probably the rest of this year, we're finding a bottom on resales and working our way off that bottom higher, but not quickly higher. right? And again, we have to find, the inventory has been going up. I mean, we have 200 more for sale than we did 2 Fridays ago, right? So that's about 6%, right? So in 2 weeks, we've increased our inventory by 6%. That's pretty significant. So it's something to watch going into the fall, is what our inventory is doing, over the longer term. So again, I just wanted to show today kind of the relative position resales are compared to new construction right now. And if you have a resale listing and you're competing with that builder, these are your challenges, is that, the builders are moving their product and offering incentives and buy downs and lower rates and upgrades and closing costs. And if you have a home for sale that that buyers have the option to pick a new house, you have to be better than that new house, right? And that's in all ways. So, look at, if you have existing listings or you have a listing coming up, look at your competition and new, because that's what's happening right now. And you can tell with the numbers, the closed sales are drastically increasing on the new construction and decreasing on resales. So anybody have any general questions, follow up? And again, the next few months, we just got to watch these numbers and see where we're headed. All right, well, we'll do this again next month.
Sorry,
go ahead, Tom.
would you mind just to show the difference of, like, comparing a few of the criteria stats between Mount Pleasant and Somerville, for instance, in terms of, the median sales, the days on market, just because it's still just startling how much more severe it is closer.
Yeah, and again, like, there's not that much new construction in Mount Pleasant, right? So Somerville is dominant.
Even James Island, right? I mean, just something where there isn't.
Right, and again, if we just go do, well, let's do city. So all of Mount Pleasant.
Yeah.
For example.
I think if you just type in MT, it will come up as a city option. Yeah.
So here's, again, this is closed sales, right? So
look at that.
Previously owned closed sales, it's very close to the market as a whole, right? We were 29.1%. Mount Pleasant's off 30%. Very steep decline, right? So look at this number. So we were at 3,030 in June of 2021. What's our number today? Half, right? So if you do resales in Mount Pleasant, right, your business, if you have the same market share, your business is half. Right, here you go. That's pretty much what you're seeing if you maintain the same market share. So I mean, that's a good example. And if we go, let's just do James Island. And let's do, so I mean, even they're rolling 12 months. I mean, there was only 25 sales, so off 19%. So not as much off the peak, but you can tell there's just not many sales, right? I mean, you're not going to survive on doing resales on James Island. There's 25 total, right? That's every agent, right? That's not this office, that's every agent. And if you go, let's just do Somerville. Here's resales off 29%. So again, very similar to the overall numbers. New construction, fairly flat. I mean, we have to kind of go outside the, Somerville, like, precisely to get to the new construction.
Yeah.
But you can see, resales, if you're doing if you're doing in a certain area, and we can even do, let's just do an area, right? Let's do inside the crosstown, right? So closed sales. So 12 months. So 12 months we've averaged, so 12 sales a month. Again, yes, these are higher end properties, but we did 47.
4 times as much. Yeah.
So we've lost
even 2 years.
we've lost 75% of the number of sales below inside the crosstown. 75%.
And what's the month supply?
So we're up to 6.7.
That's interesting. So that could be a function of price being so high, right?
It is. It is. And again, like if people don't need a second home, there's a lot of reasons for this. It's a different market, but if you're working specific markets, you can look at any of these numbers, but you can see how drastic of an effect this is having on all the resales. So, you have to sell your buyers new construction at some points, right? And you got to fight hard for those resale listings because there's just less of them. So, and again, this is 2024, it's going to look just like it is now, right? This is kind of where we're at, for the next 16 months until we figure out election, economy, interest rates, people get used to paying student loans again, people's income comes up a little bit. All that has to help the market level out. So, it's kind of like, buckle up your seatbelt next 16 months and work hard because this is the market that we're in. So,
Thank you.
all right. Well, everybody have a great weekend and just stay at it. It's one of those things. It's like agents count is going to go down over time. You can't have this many this few sales and think that all these agents are going to make it. So just be one that makes it through this, pay your bills now and then reap the benefits on the backside of this. 2025 and 2026, I truly believe are going to be good years as a real estate agent. So you just got to make it through to that time. So I've been through these cycles before. So
Yours. Thank you, Anton.
anyway, have a great weekend.
You too.
Bye.
Bye.